Good afternoon to all of you. Today I will discuss fund flow statement, and in fund flow statement today the topic which I will emphasize on funds from operation. But for a few minutes I will just recap the part which I have discussed in my previous class. That is fund. In fund flow statement we have to discuss three parts. That is what is about fund, how the fund flows, and thereafter fund flow statement. And why we prepare this fund flow statement? We prepare this fund flow statement to know the changes in working capital. To know the changes in working capital. Working capital means what? Working capital means current asset minus current liabilities. Okay? Now, I have already discussed you that fund we can discuss in two ways. In a narrow sense, narrow way, and in a broad way. In narrow sense, we will discuss fund as cash only. And in a broad way, we discuss fund as cash and the assets which is very near to cash. That is, whatever the economic resources you have, जो भी आर्थिक स्रोत हमारे पास हैं, वो सभी फंड हैं. अब फंड का फ्लो कैसे होता है? तो फंड का फ्लो तभी होगा जब वर्किंग कैपिटल में चेंजेस होगा. अब वर्किंग कैपिटल में चेंजेस कब होगा? वर्किंग कैपिटल में चेंजेस तब होगा जब करंट एसेट्स और करंट लायबिलिटीज पर इफेक्ट पड़ेगा. मतलब वर्किंग कैपिटल होता है करंट एसेट्स माइनस करंट लायबिलिटीज. दैट इज करंट वर्किंग कैपिटल इज equal to current assets minus current liabilities. That is excess of current assets over current liabilities. It means if there is a transaction between fixed assets and long-term fund, that is dotted line, you just see. If the transaction is between long-term fund to fixed assets or fixed assets to long-term fund, that will not affect on working capital, because working capital is current asset minus current liabilities. Okay? Then what about current? If the transaction be in between current assets to current liabilities or current liabilities to current assets, again there will be no effect on working capital. Why? Because the amount of current assets and current liabilities will increase or decrease equally. So if the amount of current assets and current liabilities increase or decrease equally, then there is no change in working capital. Then how the working capital will change? Yes. The working capital, it means if the transaction is horizontal, then there will be no effect on working capital. अगर horizontal transaction होता है, that is either current asset to current liabilities or current liabilities to current asset, fixed assets to long term fund or long term fund to fixed assets, working capital पर कोई असर नहीं देगा. तो horizontal तो तैयार हो गया, horizontal में working capital पर कोई effect नहीं होगा. तो कैसे effect होगा? Either vertical or diagonal. वर्टिकल ट्रांजेक्शन देखिए, फिक्स एसेट्स टू करंट एसेट और करंट एसेट टू फिक्स एसेट्स. देखिए कैसे होता है. अगर मान लो इफ द अमाउंट ऑफ करंट एसेट्स इज इंक्रीजिंग फ्रॉम 10 to 20, हाउ द अमाउंट ऑफ करंट एसेट्स इंक्रीज फ्रॉम 10 to 20? सपोज कैश in current assets, suppose cash is increasing from 10 to 20. How? Maybe the fixed assets you have sold, and when you sold the fixed assets, then what happened? You will get cash and your cash will increase. But because the transaction is between fixed assets to current asset, it means the amount of current liabilities remains same and there is change in working capital. Is that clear? Suppose if the cash is increasing, suppose horizontal transaction. If suppose cash is increasing, maybe because of fixed assets, maybe because of long-term fund. How? Because I have issued the share capital. I have borrowed fund. If we borrow fund, then what happen? Our cash will increase. And also because transaction is from long-term fund to fixed asset, current asset, it means there is no effect on current liabilities. Current liabilities remains the same. It means our cash is increasing, and if the cash will increase automatically and current liabilities remain same, it means the working capital will change. It means there is flow of fund. Okay? Now, third is, now I will discuss about fund from operation. Fund from operation you can say as, it is also known as adjusted profit and loss account. Because fund from operation is also known as adjusted profit and loss account. Means profit and loss account we calculate net profit. Okay? And this fund from operation is what? That is what are the funds that comes from operation only. From the operation the funds will come, that is net profit. Then why not this net profit is also known as fund from operation? No. Because this net profit is the addition or subtraction of non-operating income and non-operating gain. By this non-operating income and gain, our net profit is increasing. And because of non-operating expenses, our net profit is decreasing. So, we have to adjust those items due to which our net profit is increasing and those items due to which the net profit is decreasing. And that is the reason why it is called adjusted profit and loss account. So how we calculate net fund from operation? Very easy. First of all, we take net profit. How much is your net profit? 300 rupees. Now we have to adjust. Adjust means add or subtract. What we want to add? We want to add those items due to which our net profit is decreasing and which is non-operating. Why? Because I want to calculate operating fund only. Non-operating we do not consider here. And because of non-operating, our net profit is decreasing. What is that? Salary? No, this is operating. Depreciation? Yes. This is because of depreciation is non-operating expenses, that is called non-cash charges. We are not paying anyone as depreciation. We are paying as expenses on repairs of plant and machinery. But where you are paying, to whom you are paying depreciation? We are not paying any depreciation. But this depreciation, because we are using the fixed assets, so that is the reason we calculate the book value of the fixed assets by deducting depreciation. Because we are using the fixed assets. So because we are deducting depreciations to know the book value of the assets, that depreciation we will consider under the debit side of the PL account, which is not operating expenses, which is non-cash charges. We are not paying anyone. And because of this depreciation, our net profit is decreasing. If suppose there is no depreciation, then what happens? This is supposed to be 400. And because of this, net profit is decreasing. So this is your non-operating expenses. So, because of non-operating expenses, our net profit is decreasing. So we have to add here, that is depreciation, to know the funds from operation, that is 100. Now what else? That is loss on sale of fixed assets. This is also non-operating expenses. This is what? This is non-operating expenses and this is non-operating loss. Why? Because the book value of the assets is, because of the obsolete nature, the book value of the assets is 1 lakh. And we sold on 90,000. So there is 10,000 of loss. And because of this, your net profit is decreasing. Because of this 100, your net profit is decreasing. Because of this and this, if suppose there is neither depreciation nor loss on sale, then what happens? This is supposed to be 500. But because of this, 300. Because of this,